this afternoon and to be a part of this exciting conference on the third day running. I want to welcome you all to this exciting session on managing for impact. This year, UNDP joined forces with the Africa Early Stage Investor Summit. And it's a real pleasure to be here and to be able to sort of make a contribution on some of the work that we're doing. As I said, my name is Joanne Manda, and I am the Senior SDG Investment Advisor at UNDP in the Africa Sustainable Finance Hub. My role in the Africa Sustainable Finance Hub is actually to engage with the private sector, particularly investors and founders, in order to try and accelerate investment into businesses that will deliver on the SDGs. Now, this is where we are finding quite a lot of exciting movement in the market and across the ecosystem because there's a growing demand for common language, common metrics around sustainability reporting, but even more importantly, around integrating sustainability into business models and into business decision making. I think the understanding that managing for impact is getting more and more important is growing across the market and across the ecosystem. And there's a number of stakeholders who are getting engaged and involved, both from the SDG impact perspective, but also looking at impact measurement and management in a broader sense. And making sure that impact measurement and management is not just an afterthought, but really going beyond our sort of risk management model of ticking off boxes on ESG to really integrating SDGs into the core of business models and into business decision making. So we have an excellent panel of speakers this afternoon who will be covering a range of topics around IMM, around SDG impact, around ESG. And we also have a keynote speaker. And let me introduce immediately, given our time, David Muller, who is our regional SDG impact specialist. David has been working within UNDP for some time now and is very much engaged in introducing the concepts around SDG impact and improving our integration of SDGs within business models across Africa. I work very closely with him in our team, and it's great to have you here, David. Can I just check if you are hearing me?
Yes, I can hear and see you, Joanne.
Perfect. So welcome to the panel and to the session this afternoon. Perhaps let me hand over to you for a brief introduction to some of the fundamentals around UNDP's offer on SDG impact and IMM, and then we'll go into the more interactive conversation with the rest of the ecosystem stakeholders. Over to you, David.
Thank you very much, Joanne, and it's a pleasure to be here. As mentioned, I'm David, I'm a regional specialist, and I'm just going to take you through some of the background information that we wanted to use to frame today's conversation ahead of the panel discussion. So first, I think it's important for us to bring across that we feel like we are really at a challenging time and there is a need for change, both for people and planet across the world. We're just coming out of the pandemic, which, as you may know, in Africa has resulted in the worst pandemic, or in the worst recession, rather, in the last 50 years. And we're also seeing COVID having pushed an additional 40 million Africans into extreme poverty. But I think these sort of real-life scenarios are also reflected in major challenges that we have within the financial system. And this has different dimensions. On the one hand, not enough capital is where it should be. Only about 20% of the money is held in emerging markets where the majority of people live. But also a lot of the money that is currently being labeled as sustainable, from that it's oftentimes not clear how much of a contribution it really makes to sustainable development. And in this context, I think it's worth to mention the recent ESG figures, which are identifying $3.9 trillion in the third quarter of last year as ESG funds. But at the same time, the so-called SDG financing gap. So the gap to finance the sustainable development goals has actually increased due to the pandemic to 3.7 trillion US dollars. So there really seems to be a mismatch between what the capital currently does and what it should be doing. And in this context, I think it's important for us to have a common understanding of what it is when we talk about sustainability. And here, I think the key is that if we want to develop sustainably, we shouldn't just think about the current generation, but also think about how can we meet our own needs while also not compromising the needs of future generations. And if we're starting to now think, what does this mean for the private sector? I think we are obviously seeing ways that the businesses and investment activities can be disrupted by such a sustainability concept. But we're also seeing this as a way to actually prepare for the future in terms of those trends that we are currently experiencing. Coming back to the term that I used briefly, ESG, just to share a little bit of an understanding how we see this. And I think in many ways, we are seeing the environmental, social, and governance concept as a way of managing risks for the private sector. So it's really quite narrowly focused on an enterprise value, thinking about financial valuation of an organization. So to put it simple, we see ESG as an understanding of how the world around me impacts on me as an organization. But what does that mean in terms of impact as we move towards sustainability? For us, impact really is about the effects that an enterprise or an investor has on the world. So it is really about the relevance for people and planet when it comes to the business activities. Impacts can be positive and negative. Impacts can be intended and unintended, and they can also be direct and indirect. So it's oftentimes quite difficult to understand what is the impact that I have on the people and planet around the world. And if we really want to be serious about sustainability and achieve the sustainability goals, sustainable development goals, we believe that we have to become very serious about managing our impacts to be sustainable. And this is why we believe there's a real opportunity to go beyond ESG and move towards sustainability. So we think that we can not just think about how the world impacts on me, but how I impact the world. We believe we can move further than just thinking about enterprise value and really looking at the broader systematic or systems value that we are generating. And just as much or just as important is that in terms of steps that we are taking, we don't want to just be incremental, but really have a transformational shift to achieve sustainable development. And in many ways, if we stop to be very technical, I think in many ways this graphic here shows what we are talking about, because we believe there's really an opportunity to change the perspective that we've had for a long time. So the old way is really more about me thinking as an organization being at the center of people and planet. And the new way would now be understanding how I, as an organization, am part of the bigger picture. So how do I impact on the economy? How do I impact on the society? And how do I impact on the planet? And in return, of course, how that comes back to me as an enterprise or an investor as well. You may wonder, as a private sector representative, why should I care? We do believe that there is a business case for sustainability, and we've tried to summarize some of those drivers in this slide. Maybe from just a purely economic perspective, we see that sustainability can help to reduce systemic risks, or, for example, tap into new market opportunities. We're seeing that stakeholders are really pushing to take sustainability serious. So you want to think about how can you meet the demands from the societies. From a reputational perspective, we think considering sustainability and the SDGs is important to attract and retain talent, but also maybe maintain a social license where you're operating across countries and the world. And finally, and I think increasingly, we're also seeing regulations demanding considering sustainability more seriously. So you can prepare yourself for rules and regulations that may come up being implemented by government on issues around sustainability. The private sector, from our perspective, has two opportunities to contribute to the Sustainable Development Goals. On the one hand, really quite proactively developing new products and services that can benefit new stakeholders and actually contribute to solutions. And at the minimum, avoiding harm or reducing harm to at least operating sustainably and responsibly. And for the private sector really to have a say within this bigger shift that we were talking about, we really think there's a need for a transformational shift in mindset and management decision-making for us to achieve the sustainable development that we're all striving towards. And in a way, we are exactly looking for a new normal that is defined by a couple of new dimensions. So for example, we don't want to see sustainability and the SDGs just as an add-on to what business gets done, but really thinking about sustainability within all of the business that happens. We want to work with the SDGs very strategically as a tool to lead decision-making and not just for reporting purposes. And for example, we also don't want to just measure sustainability, but purposefully integrate management or managing for impact into our decision-making. And it is precisely for that purpose that 2, 3, 4 years ago, UNDP, together with a lot of public and private partners, has developed the SDG impact standards. These are an internal decision-making framework that help organizations, enterprises, and investors to be sustainable, resilient, and prosperous in the long term. They are not reporting standards, but they help you to prepare for good reporting and disclosure because they are supporting you in terms of practices and decision-making. We are not reinventing the wheel, but the SDG impact standards actually build very much on existing leading initiatives in the space of impact measurement and management. And we think they are the missing puzzle because of the decision-making and the organizational framework to embed impact into exactly that decision-making. So if you're looking at this graphic, we are seeing the high-level principles, the existing ones, such as the UN Global Compact's 10 principles, which offer the purpose and the direction on a high level. And on the other end of the spectrum, we're having impact management tools such as matrices or taxonomies, like the EU taxonomy, plus ways to disclose externally. So thinking about performance reporting like GRI or SASB. And the SDG impact standards are exactly now fitting within those two extremes and help you to operationalize the high-level principles and think through what is the best impact management tool that you can use and how can you disclose externally the impact that you have on people and planet. Concretely, what does it mean to work with the SDG impact standards? We have tried to make it as practical as possible, and each SDG impact standards has 12 action or business actions or enterprise actions that you can work through if you want to integrate the SDGs into your decision-making. You're starting off with strategy, which helps you to embed sustainability and contributing positively to the SDGs in purpose and strategy. So you can help to understand what should I focus on, what is most important for me as an organization, and where can I have the biggest impact. The second theme of an SDG impact standards is the management approach, which is about integrating responsible business practices and impact management into the system of an organization and its decision-making. So you start to generate the right conditions and think about options and can make choices between those options to optimize the contributions that you have as an organization. The third element is about transparency. This is about disclosing how you are integrating those foundational elements into purpose, strategy management, and also governance, and how you report on the performance. And this helps you to be accountable to stakeholders, which are already affected or could be affected in the future by your decisions and activities. And finally, to close off, the last two actions are around governance, and this is to reinforce your commitment to the foundational elements through the governance practices. So you can deliver the expectations of behavior, you can understand how decisions are made and how the organization itself holds itself, but also others accountable to those decisions and actions. And to close off, just to give you a sense of how you could work with the SDG impact standards, if you're interested. So we have them available for four asset classes, actually: enterprises, PE funds, and bond issuers. And we've also worked with the OECD on a set of standards for development finance. You can adopt the SDG impact standards independently through an assessment tool that helps you to prioritize actions and track your progress. We are supporting organizations to use the standards with training that we are delivering. And we're also working on an assurance framework that eventually will help enterprises and investors to authenticate their contributions. And all of these resources are publicly available on the UNDP SDG Impact website, which is listed here at the bottom of the slide. With that short introduction, I'll hand back over to Joanne and hope that all the technological things are sorted out in our panel. Thank you very much.
Thank you so much, David. And I think that was a really useful sort of gallop through what is actually quite a complicated and involving process. But it's great that you're able to give us some, baseline ideas around what it means to really integrate SDGs into your business model, and particularly into your business decision making and processes. We now have the chance to really discuss some of these and look at it from a practical perspective. I have a great panel of speakers ahead. We have Eugene Pillay, who is the head of business consulting with Grant Thornton. We have Thomas Festerling, who's a CFO and managing partner with Green Tech Capital Partners. Folabi Esan, who's a partner at Adelvo Capital. Barry Panolo, who is a senior management, project management and innovative finance specialist at the Bertha Center for social innovation and entrepreneurship. And we also have Lucia Montalvo Castro, who is the vice president of Salcante Ventures, all the way from Peru in Latin America. So it's a really great panel. All of our speakers have a vast range and rich range of experience on IMM and impact measurement. Not all engage with the SDG impact standards as David has outlined them, but I think this is all part of the conversation across the entire ecosystem. For those of you who've just joined us, we do have a Q&A button, so please send through your questions and comments as we are going through the discussion. So maybe let me start with you, Eugene Pillay, and just ask you, Grant Thornton provides a lot of advisory services to African businesses, and you have done some extensive support for clients on ESG integration within their business and ESG reporting. So what do you see are the opportunities that our African businesses can go beyond ESG and help businesses to integrate the SDGs into core decision making? Over to you, Eugene.
Thank you, Joanne. Good morning, afternoon, evening to all our viewers. Absolute pleasure to be here. So I guess thank you for the question. As a business consultant, we deal with different types of companies in different industries. But when it comes to ESG, it depends who you're talking to. And first of all, if you at the board level, ESG is a risk. It's what could it possibly do to our share prices, the sustainability of our business, and we really need to look at it, and how do we How do we put the right mechanisms in place to reduce any risk? If you go to the ESG director or manager, it's a job. It's a job in terms of I have a KPI. This is what I get paid for, and I need to make sure that I adhere to what's in my KPIs. Now, one of the scenarios that's very challenging is when you come to the part where you have to deal with ESG reporting, because you have the scenario where you have the the entity that's putting the report together, then searching through and looking for the right sort of stories to put into the report, looking for evidence to put into that backs that up. Then you get the opportunity where the auditors come along and audit that report. Now, so what I'm seeing is, first of all, ESG means different things to different people. Number one. Number two, it depends on the reporting standards that are being used by the entity, and so you look at the reporting standards and then sort of work backwards into the entity, and I think that's why for me, Joanne, the impact standards is the missing link. It's the missing link to get people involved at management level, to understand why is this important. One of the great tools that the SDG has is the self impact, the impact self assessment. And why that's important is because it helps somebody understand what is my organization doing, what are we missing, and what can we do to make it better. And when we have this sort of this sort of internally in a business, it sort of embeds itself into the business model, and you'd find that reporting would become so much easier. And therefore, for me, I'm very excited. Going through the standards, it's amazing how practical it is. Like David had mentioned, it starts from the strategy, building down to management. So from your board, sort of to the management, and then transparency on reporting, and then obviously the governance aspect. So I think it's written so well. It's easy to follow. It's even easier to implement once you understand it. And I think, Jen, so I've tried it at two clients, and I tell you, the positiveness that comes out of it, the aha moment that you find with people in their jobs, finding new value in their jobs, when utilizing the standards and understanding why I do what I do and why this is so important to the world and finding purpose. So for me, that's the amazing part about it, and yeah, I can't wait to see the impact it's gonna have as it out and as it outrolls further. Thank you.
Thank you so much, Eugene. And I think you touched on a really, really important point there about trying to move from thinking about ESG in terms of just risk and risk mitigation into something much more proactive in terms of proactive engagement with the SDGs and real outcomes on the ground, and structuring your business in a way that thinks about impact first, without letting go of the sort of return on investment. So I liked your point about the aha moments that you're starting to see with your clients there. Maybe let me move on to Thomas. Thomas, you're with Green Tech Capital Partners, and it's a long-term investor that joins forces with startups from the proof of concept stage all the way through. And you usually target under the radar companies with a sustainable business model in order to create some exclusive investment opportunities with economic, social, and governance and environmental impacts, particularly across the African market. So can you tell us a bit about your approach to sustainability and measuring your own, and perhaps even at a portfolio wide level? How do you measure your impact, your company's impact? Over to you, Thomas.
Thank you, Joanne. I hope yes, you can hear me now. Great.
Yes, I can hear you, yes.
Yes, that's perfect. No, I'm very happy to be here, and thanks a lot for all the input, also David, before. That's also always very valuable for us. So as maybe first of all, GreenTech, we are not just an investment manager or an investment company. We actually also do contribute to a lot of entrepreneurship programs, actually since this year, also with UNDP, but also with the German Development Agency, the French, the European Investment Bank. So actually in the last years, we have worked really with, I think, 500, 600 different startups in Africa, which is amazing, but also gives us a good overview who and how the companies actually are dealing with impact. And I think it's quite important. I have actually 3 points I would answer to your question. So first of all, Africa is full of problem solvers. So there are a lot of amazing people with amazing ideas. So they don't need ideas from us. There are more than enough there. But what we see a lot of times is that the right tools or resources are missing. And resources, of course, on the one hand side is capital, but on the other hand, sometimes also experts and knowledge, which we try then to also bring into the companies we work with, we invest in, or which are part of programs we're in. So we can actually, try to scale up the problem solvers and make them actually solve more problems going forward. Secondly, and that's quite important, I think also to get more capital and more visibility from outside of Africa into Africa, is that we try to help, even though all the problem solvers, all the entrepreneurs, they usually have a very good idea of the impact they want to create. It's actually not so easy to formulate the right theory of change, for example. So this is one of our tasks, actually work on the theory of change, define this, make it visible, so that also, let's say, impact funds, impact investors actually can see what they want to see. And then also work on the KPIs, on the metrics, because even though, let's say, impact is a big word, and David explained a lot about this, it's actually not so easy to measure a lot of these things. So it's important to choose the right metrics and also have ways how to measure it, and how also external people will have a way to trust the measurement. So this is the second thing. So really working on this theory and the setup with the startup. And thirdly, we then also, of course, want to measure the impact ourselves, because especially when we not work with our, let's say, own portfolio, but programs which we work with and where we support a lot, like dozens of entrepreneurs every month, I could nearly say. We want to know afterwards, of course, what has the impact been. So we're working, of course, with surveys to keep a good, very good in touch with all of them. And that's quite important. But since I also know that a lot of people listening here are coming from the development organizations, we know, of course, that impact is always what we want to achieve. But a lot of times the programs are short, like 12 months, and there's no, let's say, follow-on budget for the time afterwards. So this is really, I think, a recommendation for organizations to really also think about, because the impact usually is not visible within the first 12 months, but only afterwards, that there are follow-on programs where you can really measure the impact and then also help to channel it, make it visible, and let others see this. So I hope this helps.
No, that's extremely useful, and I like particularly your point about having a bit of a longer term perspective, right, in terms of making sure that you're measuring real impact on the ground, and having that follow-up action afterwards. I think that's actually quite an important point, and often even when we're doing our ESG reporting, it's sort of what's happened this year, but that long-term impact, seeing what really is happening on the ground is actually really, really important. And I'll loop back to you again, maybe Thomas, with a few additional questions, but let me move on to Falabi. Falabi Hassan, and you're the a partner at Delta Capital. I think you've just switched on your sound. That would be great. So yes, I can hear you. Good. Adabo Capital is sort of founded on the belief that meaningful development in sub-Saharan Africa will be driven by the application of technology to business processes across all the sectors. So maybe can you explain to us how your fund works and with various companies to drive this meaningful development? And how do you measure success?
Thank you very much. It's a pleasure to be here, and thank you to the previous speakers for their very erudite and enlightening comments. I will do my best to add one or two things to it. And as Joanne has said, we see technology as a big enabler of productivity and economic growth and development. Obviously, we're late starters on the African continent to development, to technology in development, but then it helps us to leapfrog and to bring in new types of ideas, innovations on how to use these technologies. We support companies that do that across African continent, and most of these companies are in areas of telecommunications and also fintechs, using financial services and inclusion, things like that. We see impact as a byproduct of investment. I mean, we don't see impact alone because we only see, let's say, when you make an investment, you have an impact which could be positive or negative or sometimes neutral, right? So it's not always positive, it's not always negative. Sometimes it's actually neutral. You don't impact in one way or the other. This is very important in technology because sometimes you make an investment, you don't see that there's a problem with it in any way, for example, having environmental direct impact and so on. So we have to be very careful about that. We don't see that investments um, that are in themselves unsustainable as being, we see them as they can be impactful. We see them as philanthropy. You know, for the impact for the impact to be sustained, the business itself must be sustained, right? In many ways. Otherwise, you know, the business can go away. It's a project. The impact might stay on, but actually, what we want to do is have both the sustainability and the impact being positive. And the way we do that is that we measure impact along 5 dimensions for each of our portfolio companies. The first dimension is wellness promotion. We believe that when we make investments in companies, those companies should be concerned about the well-being, health, and mental well-being, physical and mental well-being of their employees and of the surrounding ecosystem and community. And that's very important for people to actually have, let's say, positive contribution to their work and to the workplace of their communities. We think about, second one is integration into the global economy. We believe that more and more positive impact comes from when communities are integrated into the global community, and that brings a lot of positivity and, let's say, spillover benefits to the business itself, but also to the wider community. The third one is reduction of poverty, and this is completely aligned with the SDG. The other two also are, but in the integration to the global economy, we also look out for, sorry, I said reduction of poverty. That's the next one, where we see how companies are working to reduce poverty in their societies, and also, by the way, in terms of the number of people they bring into employment and how they pay those workers, right? So if people are employed in your organization and then they're paid less than the minimum wage, then we don't see that as being positively impactful. Even though they have a job now, we don't see that as being positive. Then we have environmental stewardship. So we see and ask and question how you manage the environment. You know, what do you do around you? Are you producing waste? What's your carbon footprint like? How are you mitigating these things? Even in the way you travel, you know, and the way you use all resources. And the last one is the development of skills, right? So we want to see whether people in your organization are developing the kind of skills that are useful in the global economy, in your company, but also outside. So these 5 measures, criteria that we use, some of which are quite aligned with the SDGs and some maybe not directly, they form an acronym WIRED. So WIRED, and we measure all our companies annually, at least annually, along these metrics, and they can be positive, negative, or neutral, but we don't stop there. We try to measure. So for example, if I take something like reduction of poverty, an easy way is to see how many jobs are created that are above minimum wage standards, right? And then we can see percentage of jobs that are actually above that minimum wage standard. So we'll see that go up every year. We think that we're doing better with reduction of poverty. You can also see impact of those jobs of the company outside of its own environment. I'll give an example: development of skills, where the companies actually work with other companies, with the government, or with other agencies to create programs to skill up people who are not their employees, and in that way giving back to society and becoming better members of the community. And to the actual SDGs, I looked at them, and I looked at the measures for private equity firms. And one of the things I have to say about many of these things being very, very open and direct here is that sometimes they're quite difficult to comply with. You have to learn how to use them. And so the kind of work that Thomas and other people do to help their companies comply is one of the things we do quite a bit of. And we tell companies we invest in that they should think about adding 2 to 3 days per month to report properly, to measure properly, and to think about the ESG and now what you call the SDG impact measures and so on. How do you really measure these things? How do you track them? How do you improve them? Don't assume that you get an investment from us and then you just get away with it and that's the end of it. It's going to cost you some time and resources, and we help them and coach them up front to say, yeah, you'll get the money and it will help you to grow your business, but you will have to invest an additional 48 to 72 hours of quite high level management time to get it done. We work with them very carefully to get that done. And essentially that's what we do. So happy to take questions, and I hope that helps.
No, that's absolutely phenomenal. Thank you so much, Falabi. And you've touched on some really important points here. I mean, the first one is really recognizing that impacts can be positive, negative, and or neutral. And often we spend a lot of time talking about negative impacts and not enough perhaps around some of the positive stories that we can kind of share because of our risk management perspective. And I think it's important that our companies across Africa really start to think about what is their contribution to overall development within the countries that they work in and the markets that they're in, and how can they articulate that better, because it adds value to the companies even as you articulate some of those stories a lot better. I also found it interesting that you were talking about how you get a sense that being able to comply to the sort of broad range, there's 17 SDGs, and complying to all of that could be difficult. And I think our position as UNDP is that this is 17 SDGs to select from, and I think your 5 dimensions are already touching on at least 4 of the SDGs that I could immediately actually a little bit more than that, because your environmental stewardship covers SDG 13, 14, 15, and so on. So a lot of what I'm trying to say is many companies are already making a contribution to the SDGs. It's really about being clear about the metrics and then making those links. And some of that is really more of a game of optics rather than it is the fact that you have to do something brand new. But I do think your point is well made as well, that taking a bit of time to think this through, that 2-3 day per month is actually really crucial. What we're advocating for is making this part of your overall management processes. And I think that's what Eugene was also talking about earlier in terms of the aha moment and realizing that there is purpose behind a lot of the work that you do in any company, and being able to couch it in terms of SDGs is often very inspiring. So thank you so much, Falabi, for that, and we'll probably come back to you. We do have a Q&A session once everybody has made their initial intervention. So again, for those of you who are online, please feel free to put some questions on the Q&A box. So this brings me to Barry. Very nice to have you with us this afternoon, Barry. With your work at the Bertha Center, because the Bertha Center is actually the first specialized center in Africa which is dedicated to advancing social innovation and entrepreneurship within the University of Cape Town. Can you tell us more about how you support businesses to generate impact, including by leveraging different public support through impact monetization? Over to you, Barry.
Certainly, and thank you so much for having me, Joanne, and a warm good afternoon and good morning to some of the delegates that have joined us today. So a little bit of backtracking first. So the Innovative Finance team within the Bertha Center is really focused on growing the share of global capital that is addressing impact issues, be it social or environmental. Within that, there's a lot of need for partnership building that must happen, right? So there are a lot of ecosystem stakeholders, and our function is to bridge the gap between entities like investors, asset owners, enterprises, government even, towards some of these objectives. Now, there's a lot of discourse, and picking up on some of the points made by my other panelists, there is a cost that comes to impact measurement and management. But then there's also a really strong opportunity allied to playing in that space, which is the emphasis of what I'm going to discuss. So practically, Dalberg a couple of years back estimated that $600 billion is required annually in Africa to address the SDGs. Now, that is both concerning and presents a major opportunity. At the same time, in recent years, we've had trends like COVID, which have only heightened that financing requirement, right? So more so than ever, it is not enough to look to entities like governments, like private donors to bridge that gap. We need to be looking to more traditional mainstream finance. Now, the challenge with the traditional mainstream finance industry has been a perception maybe that working towards impact takes the focus away from pursuing the financial objectives of an investment, and maybe comes with some of the attendant costs that Fulani was just speaking about just now, right? But we see it a slightly different way, because the fact that so many people are engaged around working towards the SDGs mean that we can come up with interesting configurations of these stakeholders that allow investors to contribute towards the SDGs without necessarily trading off some of that financial performance. And impact monetization is one of those things. So the concept just tries to link the social and environmental benefits that an enterprise might create towards its revenue streams and the financial benefit that the investors that support such an enterprise can realize down the line. Now, there are a range of tools, including popular instruments like social impact bonds, things like social impact incentives, which I'll not go into in exhaustive detail just now. But basically, at the core of those instruments is the recognition that even though the investors might be focused on the financial side of it, there are a lot of other stakeholders that are interested in the impact that the portfolio can produce, especially in the extended term. And for some of those stakeholders, they would be willing to provide monetary support linked to the degree of impact that is produced from the investment portfolio. So we can structure some of these instruments so that, for instance, a private foundation creates an agreement with an investor whereby if that investor's portfolio mitigates a certain amount of carbon, or maybe it's working in education and helps to bring more students into, say, the university ecosystem, allows them to overcome some of the existing deficiencies of the schooling system, then that impact will be paid for by the foundation and becomes an actual monetary flow that changes the economics of engaging with impact enterprises. So there's a lot of interesting work happening in that sphere. And what it offers is the opportunity to really look at impact as a strategic asset, a commodity that the enterprise can actually use to engage with venture capital fund managers, with other sources of finance, to say, this is an additional revenue source that I can provide you because I am an impact enterprise. And in so doing, we can maybe bridge some of the financing gaps that keep some of those early stage concepts from taking root and achieving the scale that gives them the sustainability in the long term that allows them to function more or less as regular enterprises. So that's some of the work that we're busy with at the Bertha Center, looking at knowledge outputs around some of those topics, as well as trying to bring some of these partnerships together. But a key enabler to that is for people like VC fund managers and enterprises to start building a lot of the impact capabilities that can help that system start to function. So people speak the same language, are presenting the same sorts of metrics, and there is a shared understanding of what that value creation is and how we can build financial instruments around it. So thank you, Joanne. Back to you.
No, thank you so much. And I love this point about making impact a strategic asset and actually integrating that into the conversation around what, investors should be looking for when they're looking at different enterprises. You raised some really exciting points there, and I guess that's why Bertha Center is kind of at the cutting edge of some of the work. And I'd love to circle back to you, but I think just looking at our time, let me move to Lucia, who's joining us here from Latin America. And Lucia, you've been actually doing a little bit of work trying to implement and started to work with the SDG impact standards. And, you are a part of Latin American Investment Fund, but that's not only providing capital, but also creating value more broadly. So could you tell us a little bit about your experience with the use of the SDG impact standards, the management frameworks, and tell us about how you think it can support, provide us some lessons for African countries and African organizations in embedding sustainability into their strategy, into their business models, and into their management decisions, and into disclosures. Lucia.
Thanks, Joanne, and hello, everyone. It's really great to be here. I'm coming from Peru, in Lima, Peru. So at Salcantay Ventures, we are a venture capital fund investing in early stage startups that are leveraging technology to solve the region's most pressing problems and gaps. We invest across Spanish-speaking Latin America in sectors such as fintech, edtech, jobtech, cleantech, logistics, among others. So why did we embark on this journey of impact management? We have a strong commitment to impact. We are convinced that investments in companies that are solving fundamental problems are more resilient and profitable than those that do not. And I guess as an emerging fund manager, because this is our first fund, we are constantly looking to improve our operations and wanted to formalize this commitment to impact by translating our intentions into action. So we actually want to leverage our impact mission to better position Salcantay within the increasingly competitive VC ecosystem in Latin America. But we didn't really know where to start. And this was really overwhelming at the beginning, as neither of us were experts in impact. But Belisa Rojas, our friend and advisor, presented us with the SDG impact standards, which have been a really useful tool in this process. The standards are allowing us to embed sustainability not just on our investment process, but also into our strategy, our internal management processes, as well as our governance and disclosure to investors. And as was mentioned earlier, there are many frameworks out there that it becomes really confusing, and we saw no need to reinvent the wheel, but we decided that we would rather stick to standards that are well known and would allow us to speak the same language as our stakeholders, as Barry mentioned earlier. And so to get started, we performed a self-diagnosis to understand where we are today in terms of impact management and measurement, and identify key gaps. And this was honestly a very humbling process, but at least it allowed us to know where we were. And this self-assessment allowed us to define priorities going forward, to define those areas where we were going to work on first and develop some sort of a minimum viable product of our impact measurement and management program, as well as a roadmap going forward. Obviously, we have a really long way to go before we can actually say that we have a robust impact management system. But at least we are confident that the standards are pointing us in the right direction. it's been a really useful framework to understand what the gold standard is, meaning that like everything we need to do at Salcantay in order to have the best practices. But it would also be highly unrealistic to think that we will have everything in the short term. We know this is a very complex endeavor, but it's been super useful. It's allowing us to speak the same language with our investors as well as our portfolio companies, and really pointing the way. And I guess to talk a little bit about challenges, as you mentioned, Joanne, one key challenge is that it can be a bit overwhelming, as these standards include everything that you could do and are super demanding. But you just need to be, as an organization, be honest with yourself about your capabilities and focus on what matters most to you. The self-assessment tool was actually very useful for us in this regard, to keep us honest and help us divide this complex endeavor into smaller, simpler items to understand like key activities and prioritize. I guess another challenge that funds like ourselves are facing in this process is properly aligning our internal stakeholders and key decision makers. And by these, I'm talking about the partners of the fund and the members of the investment committee in terms of the development of our impact measurement and management system. But the SDG impact standards were actually a really useful tool to frame the conversation and properly articulate what it is that we need to do and get everyone up to speed. And I would suggest other organizations that are in this journey to talk to more organizations that are probably more advanced in the process, who can share their own experiences and practices, because it's always more useful to have practical guidance in addition to the theory. And honestly, you would be surprised that those investors who you think are highly sophisticated in terms of impact are still learning. And I also would like to recommend taking the Coursera's course on impact measurement and management for the SDGs that was pointed out earlier by David. It's a really useful tool, regardless of your level of sophistication in terms of impact management, to get familiarized with this concept and tools.
Great, thank you so much, Lucia, and great to have you all the way from Peru, and just giving a bit more of a global flavor to this conversation. I think from your intervention, I think a couple of things really stand out. This issue about having the same language, both sort of with your investors and also with your portfolio companies. And I think this is what I mentioned right at the beginning of the session, that what we are seeing is a demand to sort of coalesce around a common language on sustainability and impact. And so we are seeing this as really valuable for that structuring and also framing the conversations, and going beyond just within your organization, but also with the partners that you're with, and right down across your value chain and your supply chains as well. So that's really great. It's also good that you're quite honest with some of the challenges, and mentioning that it is a bit of a demanding exercise, not in terms of necessarily the volumes of things that you might need to do, but really from the perspective of a mindset shift. We're certainly seeing that across a number of the entities and the enterprises that we're working with, that it does take a little bit of conversation, iterative thinking about what it is that I'm doing. When I was ticking boxes with the ESG exercise, and kind of identifying what might be risks to me, I'm now also thinking, wait a minute, this is about how I change my whole business model and how I integrate SDG thinking into my day-to-day operations. And that would then make it quite easy to have some of that reporting done. So some really good points there from you, and of course, it's good to see that there is some uptake within the markets. Just to kind of bring us to sort of a close, I've got just a couple more questions. I'd like to loop back to Thomas and Eugene here just quickly. Just having listened to what we've said, how do you think investors and advisory firms like yourselves can assist enterprises to move sustainability from not just an add-on thing, but to something that's really the core of how business gets done, or to how all business gets done? Maybe if we start with you, Thomas, and then Eugene, just a quick intervention.
Yeah, maybe you see me a bit laughing or smiling, because to be honest, I think especially the young entrepreneurs, the startups, the SMEs we are already working with, they have it much more in their blood than we think. I think we have to do more work with the corporates and larger organizations, to be honest, than with the startups. For them, it's really something intrinsically already, I think. And maybe we have to help them to formulate it a bit better, to make it more visible. And like I just explained before, because like other people are measuring it with some measures which are kind of very theoretic, and it's sometimes for the people who are in practice really solving the challenges, they are not so firm with that. So this we can do, but I think it's already in them. And we have to actually get more work on some of the, let's say, bigger corporations, or maybe also some investors who like show it, but don't really feel it like the startups doing it yet. So this is actually what we try to do, also connecting actually, for example, European investors with Africa. We are organizing investor trips that actually European investors can come to Africa and see how it's really on the ground, what is really solved, and not just seeing it on a, I don't know, some scientific paper. So I think we have to bring the people together. This is very, very important.
Great. That actually echoes your earlier point that, we've already got a lot of problem solvers on the African continent, and they're doing a lot of the work already. Eugene?
Thanks, Joanne. And when I attended a sustainability conference earlier this week, and there's going to be another standard that's going to be coming out soon, and we're looking at the draft of that standard, and sitting around in a room were various consulting firms, universities, and so on. But the one thing that we could all agree on was that somebody's got to teach people how to do sustainability in companies. And for me, that's the missing link, is that we need training. We need to go to corporates and do training and show them why this is important, to have the culture embedded in their business models. So for me, that's the key takeaway in terms of the next steps as a consulting firm, is highlight the importance of training our people in corporate, especially. Because that person might leave that corporate and go to another one, but they take with them the knowledge, and therefore can, do the same at another corporate, and so on. So for me, that's very key. And that's why I think the standards, going through the standards, reading it, it's quite practical and so on. But offering the training is going to be the golden nugget. Thank you.
Excellent. Thank you so much. And I think your point there is well taken. And certainly this is where UNDP sees a lot of opportunity to partner with a number of people within the ecosystem to actually get on and do some of that work around the training. Maybe just final words, perhaps, from Folabi and Brian and Lucia, just around the question of, if we're talking about early stage enterprises, what are you seeing in terms of capacities? Falabi, you mentioned earlier, spend 2 or 3 days doing X, Y, Z, but how do we ensure that, early stage enterprises are actually doing this work and putting that the SDGs into the decision making? And what's your sense around the capacities and the appetite for this?
Thank you, Joanne. I'll go first on that one. I think that the early stage investees and portfolio companies we see nowadays are very, very keyed in to SDGs. They certainly have more of an idea that they are stewards of the environment and of the earth than I think maybe was the case in prior generations, because at that time we didn't have the pressing climate um, uh, crisis that we see now and other incentives to move. So I think everyone is kind of keen to do what they can. So that goes to Jürgen's point of saying training is very important. How do we help? We we have someone in-house who's designated an ESG or impact compliance person, whose job is not only to check and help prepare the reports, but also to ensure that every company gets some training and some support to prepare those reports. And we bring them together in conferences, meetings, and things like this to ensure they see what should be done, and they exchange also with each other. We also identify experts in co-investors. So sometimes we recognize that in a co-investment company, there are people who are particularly skilled, maybe sometimes trained in impact matters. For example, Lucia described how she and her partner have invested a lot of time learning about this. We then use those resources as much as we can. And now with the connection to the UN SDG impact measurement and the team, you can be sure that we'll be directed people to your team, and also working with you to organize things like little focus groups and incentives, bring them together so they understand what needs to be done. So we're very hands-on, very practical, not theory driven. We're just trying to see how we can make it work on a day-to-day basis. We're spending quite a bit of time doing that.
Excellent. So keep it practical, keep it hands-on. I like that. Brian, maybe you can, Barry, sorry. I don't know why I keep calling you Brian. Barry, please go ahead and make your intervention, and then we'll save the best for last. Ladies, Lucia after that.
Yeah, so practically, how do we go about providing that level of support, I believe is the question, right, Joanne?
Yeah.
Yeah, so we do that on different levels. So on the one hand, we have an in-house seed fund for our students at the University of Cape Town. And really there, it's making somebody available on our team to take a lot of the content that we get from colleagues like Joan and other people in the IMM field and offer them that training firsthand, let them contextualize that to their particular business, and also try and raise the importance of what they are doing as a strategic asset, like in terms of what I outlined earlier. The other side of that equation is our work with larger organizations and governments where typically we're looking to set up structures that can support multiple enterprises or multiple projects, right? And that, I think, starts to get a little bit more complicated because of the sheer variety of entities involved. And so that typically defaults to simpler frameworks because you want to make the measurement simpler because the transaction is quite complex in its own right? So yes, but we try to understand what the particular needs are, the smaller projects versus the larger projects, how many people are involved, etc., and then bring a lot of this knowledge that we've accrued around this practice over the years to bear.
Excellent. Thank you so much. Lucia, any final sort of thoughts and reflections, and maybe also just reflecting on what you see is the role, particularly for large multilaterals like UNDP? Over to you, Lucia.
Thanks, Joanne. Yeah, I think like to the practical question on how we're trying to add value at this point, for us, it's more aspirational. Like ourselves, we are still learning about impact measurement and management, and we want to reach a point where we can go beyond just asking our companies for reporting on specific metrics to actually having a deeper understanding to gain insights from those metrics and how to help our portfolio companies to make business decisions to increase their impact. So that's what we're aiming for. And to your second question about what role multilateral organizations can be playing, I think LPs as investors in funds and as investors in companies are driving this shift towards investors caring about impact, and this is trickling down to companies, because there is a lot of hype going around, and companies and funds as well labeling themselves as caring about impact but not necessarily doing so. So there is a lot a big role in which these types of organizations can play in keeping everyone honest and helping us with education in actually teaching and sharing frameworks like the SDG impact standards and how we can actually develop a program to impact to measure and manage impact, so we can actually go beyond just talking to actually doing. And additionally, there is a lot of support coming from, at least from the perspective of us as a fund, we are gaining a lot of support from our own LPs like the IDB or the Dutch Good Growth Fund, who are providing resources and trainings for us in terms of, for instance, diversity and inclusion, how to integrate impact into our operations, that we are using not just for our own benefit, but also for the benefit of our portfolio companies. We are setting up, for instance, a technical assistance facility, which we will use to finance consultancy projects with our portfolio companies to work on these matters. So there is a lot that these organizations can do, not just from the macro level of pushing for funds and companies to become more impactful, but also providing practical and specific aid to help them on this journey.
Thank you so much, Lucia. And I think that brings us towards the end of the session. And I think suffice to say, thank you very much to our panelists. And we've covered a whole gamut of thought around, how to start to integrate SDGs into business decision-making and business models, and to really take SDG impact into account when we're running our businesses. We spoke about the need for training and technical assistance to get our businesses geared up in this way. We've spoken about keeping everyone honest and making sure that there's the right sort of common language and effective and common tools that we can all utilize, so that there's real transparency around this sort of work. And I think the overarching takeaway is try to keep this simple. And I think it's already there in the market. We have, as Falabi said, I think you raised a really, really important point. We have a new generation of business owners, business founders, and investors who see themselves as stewards of the environment and stewards of the world that we live in. And that makes a huge difference. And so the appetite to make sure that we have that double bottom line, ensuring that we still get our returns, but with impact in mind, is a really great place to be at. As UNDP, we're very excited about this area of work, as we've said. Lucia mentioned the free training course that we have on Coursera. And we'll send that around, and we'll make sure that it's on the website for ACES for those who have any interest. It's something that you can easily use. It's public knowledge, it's public information, and it's free. So go ahead and log on to that and do that. We've also formed a really vibrant partnership with the Africa Venture Philanthropy Alliance. And, part of that is actually helping to roll out user training throughout 2023. We spoke about training earlier. We'll be rolling out quite a bit of user training around the SDG impact standards. Eugene mentioned that there's, people have now a plethora of choice and a number of tools. And what we want to do is to try and wade through that confusion and actually provide users, enterprises, organizations, and corporates with some simple, practical things that they can do to really align their business operations with the SDGs. And so we'll be hosting different webinars and looking for champions on this going forward. And of course, as the UN, we really work quite closely with government. So we'll be creating platforms for getting public and private conversations around this work, as part of just that sustainability reporting and the transparency angle. So on that note, let me just say thank you one more time to my panelists. It's been great having this conversation. Thank you to David for giving us the 101 on SDG impact. And thank you, of course, to the organizers of the conference itself, ACES, who've taken this visionary step to kind of introduce the SDG impact standards onto the market in this way. Thank you to everybody, and we'll see you at the next session, which will be coming up soon.
Thank you, Joanne and team. Appreciate it.
Thank you.
Thanks, everybody.
Thank you.
Thank you.
Thank you, everyone, and goodbye.
Great. Goodbye. I think we made it with 5 just in time, right? I think we went over.